we also have Ajay Bagga with us. Ajay, wanted your take regarding this latest cabinet approval coming in, and what do you make of it as to what the impact on businesses, markets, as well as the entire economy is going to be?
No, as Sanjeev put it, theoretically, conceptually, it's a good thing. Former President Kovind has, run a committee on this, and they've just submitted their report as well. I would like to see that report. I'm sure they've taken all this into, they've factored in all this. As far as business is concerned, look at Q1 GDP this time around. The government contribution was a negative print, and that brought down the country's GDP to 6.7%. So elections have an undermining role as far as businesses go, because decision making stalls, new order flows stall, and then the new government coming on board takes time. Secondly, the politicians, instead of administering, are always in an always election on mode. So one election finishes and the next is on, or there's a municipal election. So the idea was to converge the national, the state, and the municipal level elections all into one ballot, and where voters also can vote in one go, and parties can then rest assured that they will have to face the electorate after 5 years again, and not on a regular basis, nearly every 2 quarters, have some big state coming up for election. So the idea is sound, and a very distinguished committee was made on this. I'm sure they have put a lot of thought into their solutions. We'll have to wait and watch. It will have to clear parliament, and it will have to evolve a political consensus. Some amount of cuts will need to be made. Either the central government decides that the present Lok Sabha is coterminous with UP elections, or you have UP elections which are held for a UP assembly for 2 years only, and then UP goes for election again in 2029. Those kind of things will need to be worked out, and state satraps will not agree. Nobody wants to give up power, especially after 2004, when Vajpayee ji gave up power 6 months early, thinking that the BJP is on a roll, and they got defeated. Nobody after that, no politician, will give up his seat on an earlier basis unless there is something in it for them.
Absolutely. The logistical issues, that aside, it could also, of course, like Ajay as well was saying, affect smaller parties. National issues may actually dominate regional ones. But then again, it limits the entire process to one single election tenure, and it is going to reduce massively the cost of holding elections as well. But Sanjeev, great to have you on the show. Thank you so much for joining in with that quick comment, and we'll sure to tap into you once we have a little bit more understanding as to what the cabinet approval has been for. But for now, it's important to mark the markets as well, because they've definitely staged a comeback. We've given up all of our losses. It's not like IT is out of the woods. IT is still under pressure. But as Shriram, Bajaj Finance, Bajaj Finserv, HDFC Bank, ICICI Bank, SBI, they're pulling through very nicely. We already talked about as to how ICICI Bank has made it to that 9 lakh crore rupee market cap club now for the first time ever, along with our Axis, Hindalco, Apollo Hospitals, even ITC, Hero MotoCorp are just now about to break even in trade. But Ajay, the call on the market, I know everything now depends on what the Fed is going to do tonight, and that's something that we're going to react to tomorrow morning. But largely, what's the market construct looking like with the sector rotation at play and our banks making a comeback, and FII participation finally has made a comeback too?
We should look through the last 3-4 days of trading, Aisha. I would say, what are the mega trends? One, there is easing on, and the Fed is the central banker to the global monetary supply. So as the Fed eases, there will be other banks. Already 5-6 banks have been ahead of the Fed, especially Canada and ECB, Sweden, Switzerland. So this easing is a pivotal moment. Second, as far as India goes, look at quarter one GDP, 7.4% growth in private consumption expenditure. After a long time, we saw that print, but it got shrouded in that 6.7% print and the negative from the government. This quarter, the private consumption has fallen a bit. So that will become an issue as the numbers come out in mid-October and the companies start declaring the numbers. But the third part, the flows in India, what you mentioned, FI flows come back very strongly as the Fed cuts, as it starts looking for yields elsewhere. There's $6.5 trillion sitting in US money market funds. That is not equity money, but some portion of that will get deployed into EM sovereigns. We'll get some sovereign money out of that. And some portion of that will eventually come back into equities, because making 5%, 5.1% in a US Treasury fund was the easiest thing to do, and a lot of money went into that. So a good amount is coming out of the marginal flows of roughly 1.5 trillion. Some part of that will come eventually into EMs, and India gets a 23% share of that. So foreign flows come back. Domestic flows already very strong. RBI SEBI data is pointing to 25 to 35% of marginal household financial savings coming into the equity markets via mutual funds or via insurance or directly. So clearly the flows are giving momentum to these markets. Markets are not cheap. That remains an issue, but the momentum remains very strong. The macro is good. You will get more than 7% for the second quarter because the government expenditure will recover from -1 to 14.
Uh-huh. No, sure, point taken. So a lot of moving parts really that you need to watch out for. But Shivangi, just wanted to get back and talk about a few more stocks. And of course, ICICI Bank has made that, is of course at record high and has crossed the market capitalization of 9 lakh crore for the first time. HDFC Bank is up 1.5%, while IT is tumbling away. If you had to take a top pick within IT, anything to buy on the dips, what would be that name? And if one name from the financials and large cap private banking names, what comes to mind?
Banking, especially the heavyweight banking stocks have now started to move. And, after all the other sectors participating, this was the only sector which was left. From the insurance space, now banking have started taking in cues. So definitely ICICI Bank is on my radar with the FIIs buying coming in. Of course, the heavyweights will be more of, focus. There's been a good long build up over here in ICICI Bank, and with a short covering in Bank Nifty, this stock is get a good tailwind from the entire space and buying interest. So 1340 is what I'm looking at for ICICI Bank next, with a support of 1260 levels. From the IT space, we are seeing that some sort of mixed bag here. Some stocks are witnessing profit booking while some are resiliently holding at higher zones. So my eyes are on Dixon. This stock has consistently performed from the last 16 odd months. Supports have gradually shifted higher in this stock, and consistent performer in this entire space. And in fact, in this year itself, this stock has given, more than 120% on return. So definitely one of the strongest counters here, and getting ready after a good halt at the higher zones. So this consolidation only means, a good upside move for this stock, which it is getting ready. So the targets next that I'm looking at for Dixon is 14,600, and 17,750 would be the, 13,750 would be a crucial support to watch out.
On that note, I'm going to get in some BTST trades going as well. Shivangi, what's on your list?
On the BTST side, I have KEI, which is looking quite positive, coming out of a good consolidative band, exactly held on to its 50 daily exponential moving average as well. The stock has, consistently performed on a month-on-month basis, and holding quite well at these levels. So this stock is looking quite good and especially with the buying interest in the last hour, it's looking quite lucrative. So, here is one target over here. The next targets that we're looking at is 4680 levels with a stop of 4400 levels. So this would be the BTST trade.
Okay, so that's the BTST trade from Shivangi. What about you, Kunal?
So I'll go with two large cap names. Buy on HDFC Bank. The stock looking quite fresh again, heading towards a breakout closer to that 1700 mark. So 1725 is a target. Stop loss could be kept at 1675. And the second would be a buy on Bajaj Finance. That's a chart which I've been bullish on over the last 1 month specifically. And now it's coming back into a breakout of a bigger swing resistance around the 7600, 7700 zone. So would suggest a target of 7800. Stop loss could be kept at 7550.
Right, okay, those are some stock ideas coming your way. But Ajay, anything that you're looking at in terms of a theme that's looking attractive in this market, or are you just recommending to stay put and keep some powder dry for whenever the market eases off?
No, I think today's volatility is Fed driven. We have to see the broader trend. Rural demand is coming back. And there, I think the two-wheeler pack is looking quite good. They've done well as well. Pharma reached an all-time high, and we have seen some correction. But I think pharma is going to outperform, especially versus IT. IT, there could be some delays in the order pickup, as I mentioned last time as well. But overall, pharma and IT will do well going ahead. But both have made highs on the indices, and now we are seeing some amount of profit taking coming in. But pharma should outperform. And rural demand themes. So I think FMCG again did very well, and we've seen some amount of fall from those levels. But as the festival season picks up over the next 3 months, we will get a good idea. And as the harvest comes in, with the good monsoon already in, that is a positive for rural demand picking up. Urban demand picked up in the first quarter itself, and with more government spending this quarter, both of them should do well. So durables and suppliers into the building materials, real estate companies, domestic cyclicals, I think these will do very well. PVs, there is an issue right now of volumes. So wait and watch on passenger vehicles, but two-wheelers are looking the best.
Two-wheelers are looking the best, passenger vehicles in a bit of a spot of bother, but the consumer durable space is looking quite nice. In fact, since we're talking about consumer durables, here at what Blue Star management had to tell us earlier, we did speak with them to understand how the overall festive season has started off, because Onam was just last week, and the management did talk about how we have seen a good pickup in demand so far. And he said, Mr. Tyagarajan, that is said that overall 30% growth is expected this year, and they're targeting market share gains as well. Here are a slice of our earlier conversation with them.
I think post the summer season, the demand continues to be good, and one would have expected Onam to deliver much more, but the Wayanad tragedy happened, and the mood is somewhat muted. But I am seeing great demand across all markets as we are heading into the peak festive season. Going forward, this year has the potential to deliver more than 30% growth full financial year. It will all depend on how the commodity prices are going to hold up and the exchange rates. Yeah, I'm optimistic that this year for room air conditioners, it could be a year with more than 30% growth.
Okay, that's the take coming in from the Blue Star management. In the meantime, let's also get in some more perspective on the market construct right now. Here's none other than S. Narain telling us what he's making of the market mood.
The financials underperformance is primarily because of the FIs being overowned in that segment. And what happened was the benchmark for them, which is MSCI, had a very low weightage in financials. And they were very overowned. If you look at the period from 2021 onwards, they've been the only segment which has sold. So they were overowned that segment, and thanks to low weightage in financials in their MSCI index, and they've been selling. I think by the time November happens, the benchmark weightage in financials would have gone up substantially. So the key reason for the selling in financials comes to an end by November. So I don't think it was an economy issue. I don't think it was a valuation issue. it was an excess holding by FI issue, and that excess holding by FI issue is coming to an end. So that's one of the reasons why we are so positive on financials. The only challenge with financials being your most positive sector is it is not a defensive sector. It would be always good, like in 2007, we used to be positive on consumer staples and pharma when the market was very bullish, but those sectors are very defensive. So to be bullish on those sectors was very easy. Whereas to say that you're very positive on financials is a little bit of a problem because everyone knows it's an economy sector, it's a leverage sector.
Okay, so that's the latest coming in from S. Narain. But just taking stock of some more buzzers, RCF is up in the trading session. Deepak Fertilizers is doing quite well. Alkyl amines, so some of these entire chemical basket is reacting. Remember, the cabinet decision regarding some of the subsidies is providing an extra fillip as well. Overall, for the market, there has been a bit of a quiet down because all the four key indices, barring Bank Nifty, that is, because that's the big outperformer today, the Nifty has again moved into the red and a bit of a disappointment in the last few minutes itself. That's what we are seeing. Just let's take stock of, apart from IT, what else is in the red right now? Well, it is all IT as far as the top 5 names are concerned. But clearly some worries coming in for the auto sector as well. Kunal, what's your take within autos? So what would you bet on or what would you stay away from?
So I'll stay away from Tata Motors for the time being, a stock which had done exceptionally well. But then over the last 1 month, I think we've seen a very sharp correction coming by for Tata Motors from 1150 odd mark. The stock is now sub 1000 levels, almost at 950. So there's been a 20% correction for the stock, and it's a very subtle kind of a correction which has come back into Tata Motors. The stock is now inching very close towards a retest of a major moving average support on the weekly chart, and if it sustains below this 960 mark, I would probably expect the stock to get into a further corrective phase, maybe trying to challenge even the 900 mark, say over the next couple of weeks. Then, but from the attractive front from the auto pack, I think Ashok Leyland at 230 to 40 mark, I think looks to be coming back into a strong attractive territory. So I think closer to 230 levels could be a very good risk reward to go for a buy on Ashok Leyland. We've seen Hero MotoCorp doing exceptionally well. That stock moved to I think 6100 mark today or yesterday and is now corrected back towards that sub 6000 level. So in case if it comes back to that 5800 mark, that could be an attractive territory to go for a buy.
Okay, that's that on autos. But Shivangi, Kunal, Ajay, thank you all of you for taking the time out and joining us today.
If you like this video, then like, share and subscribe to ET Now.